that's the stock for today. But back to auto and those launches, Sonia.
Absolutely. I mean, it's going to be a big year. A lot of these companies are very aggressively upgrading their portfolios as well, their India portfolios. But there are almost 25 new launches in 2023 from the large players. The one that I'm closely watching is from the M&M stable, which will happen in the month of January. It's the XUV 400 electric vehicle that promises to be both at an attractive price point as well as good on the road. So let's see. Basudeb Banerjee, analyst at ICICI Securities, joins us now to talk about that. Basu, before we talk about the new launches, tell us about the stock prices, right? As we head into the new year, what do you see as the outlook for the auto sector? Which are the stocks that you recommend buying? Which are the ones that you would avoid?
Yeah, see, first half of the calendar year 22, the sector outperformed by around 22%. And in second half, it was more or less at par with the benchmark index. So going ahead, if you look at no more price hikes spending in a big way because of input cost material, though bit of RD norm-led price hike for diesel models will come in, but petrol prices on the weaker footing. So overall, TCO is not going to inflate in a big way. Interest rates moving up by 50-100 basis points on this base for a 15-20 lakh car doesn't pinch the pocket of the consumers much. So from that angle, from a 2-year perspective, our top pick in the space remains TVS Motors, followed by again another beneficiary of premiumization in the auto space being Eicher Motors, Royal Enfield brand. And in the four-wheeler space, from a cyclicality perspective, my topic remains Ashok Leyland, where CV volumes are pretty much steady and benefit of raw material price coming down will seep through the numbers very soon. Rest from a M&M perspective, yes, very good launches, good show in the UV space, tractors consolidating, but stock price moved up too fast. So yes, for last few months, M&M has been consolidating. Now is the turn for those promotional priced models to go out and proper pricing action for XUV 700 and Scorpio N to come through. So auto segment margin moving up should take M&M to the next level.
But from a valuation standpoint, I mean, M&M has had a great year. It's up almost 53%. Do you think there's limited upside from a valuation standpoint as well? How does it stack up with its peers?
You see, peers-wise for M&M, no proper peer as such. So there's no point in comparing Maruti Suzuki's valuation with M&M. For M&M, it is more of on a SOTP basis where the other listed subs, tractor business recovering back and the auto segment margin moving up. So on a blended basis, M&M is trading somewhere around 18 times core business earnings FY24. So with auto segment margin moving up, overall cash flow visibility improving, monetization of assets through further stake sale in EV segment down the line, and rolling over to fiscal 25 earnings. So these will be the triggers for M&M's price to move up in next 12 months per se.
I also wanted your thoughts on what's happening with Hero Moto, because, you know, over there are a lot of there's a lot of commentary on how perhaps the company is just unable to regain its lost market share. There are some leadership issues as well. The stock has done nothing for investors. I mean, 4 years back, Hero Moto was at 3,000 rupees. Today, it's at, 2780 or so. Do you think fortunes can turn or fortunes can change for Hero?
Yeah, as you rightly said, if you look at two-wheeler markets have declined 35% between FY 2021-22. 35% is not a small number. First half of that was impacted by COVID, and second half of that period has been impacted by weak rural consumer discretionary demand. So now for last 4 months, September, October, November, December, if I look at overall pan-India retail numbers, there's a huge divergence between retail and wholesale. Earlier, pre-festive season, retails used to be 2.5 lakh units a week. And now, post-festive season, even in the month of November, December, retail units are like 3 lakh units plus a week. So almost 20% better. And you can see the numbers published on 1st of the month that October was 30% lower than September, and November was 30% lower than October. So which implies a huge quantum of destocking activities going on, which I suppose will happen in December also. So from that perspective, with this level of retail consumer sentiment gradually recovering in rurals, so from next calendar year onwards, I won't be surprised that on a benign base, wholesale start picking up for the mass market two-wheelers, and Hero is the leader in the mass market segment. And as you said, market share overall did not go anywhere for Hero, or it was on the downward bias. That is because Hero is primarily a rural-centric play. And in last 18 months, rural markets have been quite subdued, where urban-centric plays have done relatively better.
All right, we'll leave it at that. For Hero, there is additional issues, right? The recent resignations that have taken place from the company. There is some shakiness as far as the top leadership is concerned, and that doesn't bode too well for the stock either. Basu, thanks a lot for joining in and giving us an update on the auto space and how to approach it. Well, let's get some quick calls in at 9:10 this morning. The